Hey veterans, do you know what your seller concessions can do for you? Do you know the ins and outs of what's allowed and what's not when it comes to concessions? Does your agent know what's allowed and what's not when it comes to concessions? Hang out, we're going to unpack this. So, this comes from chapter 8 out of the 26-7. This is section 5 of chapter 8 where the book talks about seller concessions. So first, a seller concession is something that the seller is giving back to the buyer. It comes in lots of forms, could be money, could be points, could be the hot tub, whatever. All of those things can count as seller concessions. Seller concessions are absolutely a thing that is happening nowadays in the Puget Sound area because the market is absolutely competitive and sellers are still out there selling homes. So don't be surprised if you get the opportunity to use one of these during your home purchase. Okay, so section B is the first thing it says seller concessions include but are not limited to. First, the seller can pay the veteran's funding fee. So that's a thing that is super, super nice. Second, the seller can pay the taxes and insurance for the buyer, right? Doesn't get better than that. Third, gifts such as the TV and the microwave oven or the hot tub or the beer fridge in the garage, all of those things are absolutely acceptable seller concessions. Four, payment of extra points can be a seller concession. So, for those of you who don't know, a point is 1% of the purchase price of the loan. When you buy points, you will lower your rate and it'll save you money per month. That's why it matters. Five, the seller can make provisions for an escrowed account that would accommodate a temporary buy down. So, a temporary buy down is where you qualify for your home loan at this rate up here, and then the seller pays 2 points. Or, I mean, to be fair, there's lots of different versions of this, but for the simple sake, a 2-to-1 buy down, the seller pays 2 points for the first year of your home loan, and then in the second year, the seller will pay 1 point of your home loan. In the third year, you take the full brunt of your mortgage. All the way till that point, though, it is reducing your monthly output all the way to the point it's where it's at. They take the mortgage over. If you're lucky enough and you're in a situation where the market is forecasted to drop, like we are, all of that extra money in that escrowed account. So if they gave you 10 grand and you've only used five of it, that $5,000 gets put into the principal of your loan. So when you refinance it, you refinance a smaller amount. Win-win for everybody. And number 6, this is the one this is the one that brought us here today. The seller can pay off debts such as cars, credit cards, whatever. Absolutely something that you can use to your advantage when there's extra money in your deal and you have a seller concession. Now, the limit on the concessions is 4%. The book says any concessions or combination of concessions that exceed 4% that exceed 4% of the reasonable value of the home can be considered excessive. Okay. I hope this helps. I hope everybody learned a little bit more about their seller concessions. If you have a question, don't hesitate to leave it in the comments. I answer all the comments. If you don't want to leave in the comments, you want to reach out to me personally, my Candly link is in the description. We can do a free 30-minute phone call right then and there. Absolutely a solid way to get a hold of me. And if you have anything VA you need my help with, don't hesitate to reach out to me. I'm Byron Thomas, a veteran and a loan officer from Clear Choice Mortgage. Follow me here for more mortgage tips. Peace.